Welcome everyone to the intro to accounting session. I would like to start the session by asking you all, how many of you here know about accounting? Anything about accounting or what accounting means in general? Shubham Sarkar, okay. Shubham, go ahead and just explain to me. Okay, Shubham Om.
Accounting basically means keeping a record of your finances, keeping a record of debits and credits from an organization or from a person. It is
Like how can accounting value you from a personal perspective, right? That's what I ask.
from a personal perspective. Accounting means keeping track of my finances, like how much I spend, where I spend, how much I earn, and how much I save. That's accounting in personal terms, like how much I save and how calculated my uh, expenses and earnings are.
So that will in turn help you to manage your money in a better way, right?
Yeah.
Okay. Om or Meghna, anything else you want to add to this?
Nah, just the same. Like it's just like keeping a log of transactions, financial transactions, which could include the recurring expenses, the assets and liabilities which we have, etc. Like that.
Okay. Yeah. So that is what accounting is from a personal perspective, right? Even from a company's perspective, this like accounting terms stand similar. But when we actually see the account statement of any company, we see a lot of terms like valuation, goodwill, EBITDA, EBIT, many jargons. Okay, so what are those jargons? Are those simply just some technical terms which don't really have any value in real life, or do those terms mean something in real life? So that is what we are going to cover in this session, and we will also see whenever you see a statement, any financial statement of a company, we will mostly focus on three statements in this session. Whenever you see those statements, what can you infer from that statement? That is what we will cover in brief, right? Not in very much depth. So we will start with the overview of what we will cover. We will cover what is accounting, a bit of which you actually said yourself, uses of accounting, fundamental concepts, sneak peek into the financial statements. Like I said, the three financial statements which we will cover, which is balance sheet, income statement, cash flow statement, uses of these specific financial statements, where each of these statements are used and what it is used to infer. And also we will cover the jargons associated with those statements, and then we will go into assessing a company's financial statement, that we will come to later, right? Let's start with it. So accounting, like you all said, accounting is mostly used for keeping a track of all the expenses, incomes, and everything of that sort. But from a company's perspective, why accounting is necessary? First of all, it is necessary to understand if like the company is growing, if it's making profit, where it can like curtail the cost and stuff like that, which to us would sound very trivial because we all know about those, right? But real part, like why a company accounts. Wait a second. So why a company accounts is mostly because of legal compliances and taxation. This is one of the main reason why a company accounts, and most of the people actually ignore this part, because there are many legal compliances by which a company is bounded, right? And if they don't account their profits, their losses, and where each of their money actually went for, they can very easily be penalized. So that is the main reason why a company has to account. And definitely taxation, if you can account your profits and losses properly, then you can actually like book a lot of losses and give less tax to the company. There are methods for that. So that is why the companies actually prefer accounting. Like one of their wings in all big companies are account wings. So this is the type of accounting, like mostly it's of 6 types: cost accounting, management accounting, financial accounting, tax accounting, international accounting, and government accounting. Okay. So let's move ahead. So as we said, what are the uses of accounting, right? So it's tracking expenses, second tracking expenditure, tracking income, tracking expenditure. Then there is quantitative information, like informations regarding the quantity of everything. How much money I am spending, how much money I am earning from specific operations, how much money is actually generated, or how much money is spent. So those all things come under quantitative informations. Assessing performance, a company's performance assessment can actually be tracked from these financial statements itself. And then there is backing up data. And lastly, I would come to ensuring statutory compliances, which is just a very big technical jargon for like maintaining legal compliances, like maintaining the legal record, properly managing everything, and so that they don't fall into some legal loopholes. Moving ahead, these are the 5 concepts of accounting: mostly business ethics concept, money measurement concept, concern concept, accounting period concept, and cost concept. We won't go in depth into these because you won't be needing. We just kept this slide so that we don't miss on anything, right? Moving ahead, we'll jump into the financial statements directly. So financial statements, as I also mentioned earlier, they are written records of financial results and performances of business activities. They are mostly written during some specific periods. And if you want to read the financial statement of any listed companies in the stock market, you can go ahead to this screener.in, or you can also visit the screener of Ticker from where I read the statements to better understand these financial statements. So, as I said, financial statements we will be covering is income statement, cash flow statement, balance sheet. Now, each of these statements focus on 3 like different perspectives of a company. Let's go ahead with balance sheet first. So why is the balance sheet called a balance sheet? Can anyone actually go ahead and say anything on this?
But I think the balance sheet is called a balance sheet because it has the assets and liabilities of a company. And for most companies, the number of assets, the amount of assets is equal to the number of liabilities. So it is balanced, so as to say. So this is called a balance sheet.
Okay, you are close enough. Anyone else? No one?
Like
Okay, so yeah, go ahead.
a balance sheet is called balance sheet because it stores the credit and debit part, basically the transactions, like the assets which they get in and the liabilities which they make, and they try to balance it out with some remaining amount, I guess. So when these all data are stored in one place, that's called a balance sheet.
But do balance sheet only talk about assets and liabilities, nothing else?
Even equities, who, as I can say,
Shareholder equity.
Okay, so what do then balance sheet balance? Only assets and liabilities and nothing on the equity part.
Shareholders equity is a part of liabilities of the balance sheet, I guess.
Yes. So that is what they actually balance, like asset to liability and equity combined. So I have provided a snapshot of a balance sheet here. So that actually provides a company's financial position, like how much assets a company have, how much liabilities, and how much equity a company has. Now, going a bit like what to say in short with assets, liabilities, and equity, because assets, what asset is asset? Okay, I would like to ask from you all what asset is before going.
An asset is a piece of hardware or software which generates economic value for the company.
Economic value for the company. Okay. So is a machine like let's assume there is a manufacturing company and there is a lathe machine. So is the lathe machine a asset because it is providing value for the company?
I think
Yeah.
because the company owns it.
Yeah, I think
It's an asset, but I also feel that humans are the greatest assets which a company can have. So even I will count humans as the asset of the company. So it is not shown in the balance sheet. Yeah, it's there.
Okay, Rishabh, you wanted to say something. Go ahead.
Yeah. So I think asset is anything whose value increases with time.
Yeah, that is how we all can perceive assets, right? Whose value appreciates with time. See, okay, Aditya, what was your take on like the lathe machine example?
So I feel like asset is anything that is owned by a company. Just like we own houses and stuff and we call it our assets. I think anything that is valuable to the company is an asset for the company.
Yeah, but
But,
can
but that thing should generate something for the company.
The machine is
yeah,
working and generating a revenue at the end.
yes,
So you get the
definitely,
overall.
definitely. But will it go under assets? That is the main question.
yeah, if the lathe machine is owned by the company and it generates any economic value for the company, it will go under assets.
Okay, Rishabh still raised his hand, so you have more things to add to it.
No. My hand was raised. I
Okay.
forgot to unraise it.
Yeah, as like the lathe machine can come under inventory part. Okay, so it will mostly go into machinery part, but yeah, most people think that it can't be added into asset because of its depreciation in value, but then it also generates revenue for the company. So it depends on the person, it depends more on the company who are actually doing the accounting practices. So that is asset. And what is liability then?
Liabilities are like the loans taken by a company to finance its activities, to finance its assets.
Okay, Meghna.
Liability can be anything that is decreasing your productivity and decreasing the overall production. So
But
like
liability always have to decrease your productivity. Like for example, if think you purchase some raw materials, so it will come under some expenses, right?
Yeah, but you're using the raw materials to generate profit, right? So it's not really a liability.
Okay.
Like liabilities are the things, loans or obligations taken by the company with the belief that they can generate more revenue, more profits for it than the interests incurred by the company.
Okay.
And I can maybe try to modify that thing.
Mhm.
Is liability can be considered as expenses by the company, which tries to produce more productivity or more profit to the company, but in the same time they need to return it back, or the value will decrease as per the time goes by.
Yes, that summarizes it all, right? Anyone would like to add anything to it? Because I think that is the complete understanding of what liability is. Okay. And what about equity? No one?
Shareholders' equity is the amount invested by the shareholders into the company. It is the liability of the company because it is actually the shareholders' money which they have invested.
So if it is the liability of the company, why isn't it added in the liability section, and why a different section is created for the equity part?
In like most financial
Because
statements,
those
it
are
is
not
in
owned by
liability
the
section, I
company.
guess.
It cannot be exactly classified like liabilities, because from equity we get earnings too.
Yes, exactly. Because we can sometimes get earning from the equity part. So it is like it is another section, but not actually under liabilities, right? It
Maybe we should
balances.
just go into what is equity. Just like give them a brief description of what is equity in general.
No, like I would have given, but I would like to ask them themselves. Like they are giving quite good answers. They are mostly summarizing everything. Like four people together are summarizing everything. So yeah, go
Sure,
ahead.
but still give them like a brief description of what
Yeah.
equity is exactly.
Yeah, what equity is in this case, like shareholders equity, what it is, not general equity, but
What is
shareholder.
equity? What is equity? Bas.
Part
Okay,
ownership in a company.
Okay. Anyone else?
Same answer from my side. I think it's the same answer I gave in the interview which I had for the recruitment process.
Okay. Then what is shareholders equity in this case? Like who is owning the share, like the ownership in the company in
The
this section?
shareholder.
Anyone who
The,
buys the share for the company.
Yes, exactly. Anyone who is a shareholder of the company, right? So the total shareholders, and that is what is written common shares, like whatever is circulating in the market, right? So going ahead with the balance sheet, I would like to ask Alankrita to take over the balance sheet.
So coming to the balance sheet, first we would divide assets and liabilities into two parts, that is current and non-current. First, the current assets. These are the assets that the company expects to sell, use up, or convert into cash in less than 1 year. For example, accounts receivable. These are the money that the customer owns to the company for the work the company has done to them. Second is the inventory. These are the goods that are stored, stocked in the company and can be sold. Second is the non-current. Non-current assets are the assets that the company expects to hold for more than 1 year. For example, property, plant, and equipment. These are the physical assets like machines, buildings, and equipment that the company owns. Now, coming to the liabilities. The current liabilities are the liabilities at the obligations that the company has to pay within 1 year. For example, account payable. These are the money that the company owns to the suppliers for the goods and services that they have received and not yet paid for. Coming to non-current assets and non-current liabilities, these are the obligations that the company needs to pay for, can be paid for more than 1 year. For example, loan payable, loan repayable for over 5 year of periods. The next slide. Now coming to balance sheet terms. As mentioned earlier, account payable comes under current liabilities. These are the money that the company has to pay for the suppliers for the goods and services that they have received and not yet paid. For example, a restaurant has received ingredients from the suppliers but have not yet paid for. Then this money comes under the account payable. Second is the account receivable. These are the money that the customer owns to the company for the goods and services that they have bought on credit. Now the goodwill. These are the premium paid on the acquisition of another business. For example, let's imagine a company A buys company B for $1 million. Company B has assets of worth $80,000 and company and the liabilities of worth $20,000. Now company at its has identifiable assets amounts to $60,000. Then now company A has bought company B for $1 million, which is $40,000 more than its identifiable assets. Then this $40,000 becomes the goodwill for company A's balance sheet. Now, the intangible assets. These are the long term assets of the business that have no physical substance. For example, license, patents, and trademarks. Now, coming to contingencies. These are the potential liability that may occur depending on the future outcomes. Uh, these are the liabilities that are possible and probable. For example, the pending lawsuits. Now, lastly, the accrued liabilities. These are the liabilities that have incurred but the company has not yet paid. For example, the unpaid current electricity bill. That money is the accrued liabilities. That's for my part.
Okay, so before moving into income statement, I would like to ask all of you if there are any questions regarding balance sheet or the basics of accounting, which we covered. Any questions, any types of questions, anything which you feel you didn't understand. Yeah.
So
Okay.
technically, as we have seen till now, loan is a liability. But then we can also say loan increases the productivity and it helps to expand, helps in, product selling and make profit. So should it be considered a liability under current year or asset in the current year and liability in the other one?
No, it will be considered liability only, not asset, because here in this case you have to pay the loan amount, right? Not like you can go ahead and not pay the loan amount. Like assuming that you are not waived of the loan, you have to pay the loan amount. So depending upon the period of your loan, the loan will be current or non-current. But yeah, what you ask is that I think the more appropriate question is that why then loan is not asset and liability, because loan can be used for expansion and value creation, right?
Now the thing is, today in 2024 I'm taking a loan for 5 years, and for throughout this 5 years I'm making profit and selling things. Okay, so in that case loan becomes indirectly my asset, and then after 5 years it becomes a liability. So under financial statement of 2024, does it go down in under liability section of non-current or a current asset?
Okay, it will go down for liability itself. Like you said that after 5 years this will be converted into liability, but initially you are considering is that it as an asset, because that is the capital which you are using for creating value, right? Now am I right,
Can I say
Yes,
something?
Dada. Yes, Dada.
Yeah, so that is what will happen, that it will be considered under liabilities like itself. But like the thing you asked about the period, that for the first 4 years it will be considered a asset, and for the 5th year it will be considered a liability. It won't happen in that way, because yeah, wait a second. So that won't happen in that way, because eventually after 5 years you know from the first year itself that it's a liability and you will have to pay it and like give it to the bank and give the interest amount, right? Yeah, Tawfiq, you wanted to say something.
Yeah, so my thing was even it is now or 5 years back, it is actually a liability. Okay, so the current liability and the long-term liability is two different. If you are money, like if you are considering the total whole amount of the loan, that is a long-term liability. Okay, but the current portion that has to be paid in this year, that is a current liability, and the long-term liability is the total amount. And if you are considering the money as an asset, but that is not happening, because if you are borrowing money from the bank and converting into inventory, after that conversion the inventory is an asset, not the money is an. Okay, that's the difference.
And there are more concerns, like I said, that these three things, like the three financial statements we are going into, these three are already there. We are covering this, but there are more things, like the way you asked, there is a like specific thing called journal ledger. So when you go into journal ledger, then you tend to realize that why this thing is exactly happening. Like Tawfiq said, that the cash which you are like getting in as credit, that cash you are converting into inventory, then that inventory is generating you some profit. So that is how it is structured in a journal or ledger or then trial balance account, right? So that is not what we are covering right now, but yeah, it's a good question which you asked. That is a flaw which we are not covering right now. Then there is net
another
present
part of accounting.
Yes, and then there is net present value, that also talks about what is the present value, what is the cash inflow, what is the cash outflow. There are more things like those questions will also crop up when we go into cash flow statements, right? Yeah, Shubham, you have been raising hand for a long time.
I think it is due to double entry system. It will be both in the assets category and the liabilities category. Like
Okay.
liability is the loan we have taken, and assets is our cash or cash balances. It will be in both the liabilities and the assets section. And with the cash and cash balances as our asset, we can buy inventory and buy machines and all that stuff. When we have
Okay.
to like pay up the loan after the specified time period.
Okay, now try to understand this. Think you took a credit from the bank. Okay, so that credit when you take from the bank, that credit is a liability, right? That credit is a liability. But when you took it from the bank in like accounting, there is always a credit and debit side, and it always has to be balanced. So when you take the credit from the bank, you have to add it somewhere. So when you add it to, let's say, inventory account, now that inventory account, that actually is your asset. So that is why I said what Om said was not completely wrong, but then inventory account turns into your asset, not that the liability turned into your asset. Okay, so the inventory account turns into your asset, that generates you some sales, from that sales you get some profit. So that is the way to look at it. But the loan you took, that is still a liability. Understood?
Got it.
No, I am asking Shubham. So
Yeah, understood.
yes. So moving ahead to income statement. This, as you all may have, like income statement, I guess, is the only thing which maybe you will have a lot more exposure of, because somehow, sometimes you have seen income statements of a specific person, maybe, or a company, anyone for that instance. So income statement is actually known as a profit and loss statement as well. So what it does is, like from the name itself, we can infer revenues, expenses, profits and loss over a specific period is summarized. Okay. And it is mostly of a fiscal year. If you take like quarters or oh wait a second, oh sorry, fiscal quarter, sorry, fiscal quarter or a fiscal year. Okay, any of it can be for inferring how a company is performing overall in that specific time period. So moving ahead to the income statement, I would like to ask on Nick. He's there in the meet, right?
Yes. Good morning, everyone.
Yeah, Anik, take over.
Yeah. So income statements. To me, income statements in simple words means a parameter which decides whether a company is making profit or loss. That much. And moving on to the income statement terms. First one is revenue. Revenue of a company means the total income generated uh, by from their sales it makes, and then the cost of goods sold or COGS. It means it's the direct cost attributed to producing goods. Then moving on to gross profit. Gross profit means the revenue minus the revenue which the company generated minus the COGS gives the gross profit. And then the operating expenses. Operating expenses means the a company when it runs it has some rents, then it has some advertisements and promotions, and the expenses which go under this goes to the operating expenses. Then the operating income. Operating income, a measure of company's profitability that reflects the profit earned from its core business operations. Means and excluding any income from the expenses not directly to the primary activities of the business. Next slide.
Yeah, before we move on to the next slide, I would like to ask anyone any doubt on this section? No one, right? So, okay, but wait a second. Before moving ahead, I would like to ask, when there is no doubt, I would like to ask to the audience itself. Here we can see operating expense, operating income. What is non-operating expense or non-operating income? Anyone?
Non-operating income might be the income generated from its investment activities. Like if the company has invested in other companies, they might receive dividend. If the company has given loans, they might receive interest. So these are non-operating activities of the company. So that is operating income. And operating expenses are all the expenses that are not directly related to the operations of the company or the company else.
Okay, that was a good description, I guess. Yeah, go ahead.
Yeah. In simple manner, in simplified manner, operating is something which we do actively. So any active income and expenses can be categorized in operating expenses and income, and whatever it is done passively or non-actively, which we will consider it as non-operating expenses or non-operating income. So basically, any equity from which the company profits, or any loan the company has given, or any of the things by sales, or any contract they earn, that can be categorized as non-operating expenses and incomes.
Okay. Another question I have, as Shubham and Om said, right? One question I had was like from seeing the slide itself. The gross profit is revenue minus COGS. It is cost of goods sold. So that is the gross profit, right? Is this correct or is this wrong?
Yeah.
It's correct, right?
Hmm.
Yeah. Then why is expenses not like covered in this? Why the expenses part is not subtracted?
Because the cost of good itself has the expenses made on the good per unit. So the cost of goods sold contains the expenses itself.
So cost of goods sold, okay. So you mean like there was a revenue of some amount, and then the cost of the goods sold is like subtracted, and we get the gross profit. But there weren't other costs like advertising, like promotion.
So when we calculate the cost of goods sold, we have to take in account of everything, and we are doing it for per product. So if I sell 1 unit, and what's the amount I'm putting in to sell 1 unit? That's all included in the cost of goods sold. I think this was told in the last lecture last week.
Yeah, exactly.
Great, great. That was what.
And there can be another approach is that they're getting the revenue from any other source by keeping the product cost less. But in any way or the other way, the costs are being included in the product per
Yeah.
unit.
So like if I'm doing advertisement and how much I'm putting in the advertisement to bring one customer to my company, and everything I guess is included in the cost of goods sold.
Yes. Great audience, I would say.
That's actually not COGS. That is not COGS. Your COGS is just the cost of acquiring your raw material. It does not include your advertisement, promotion, या जो भी whatever extras you have. That is not a part of COGS, so you cannot include it. So it's not correct. COGS
So then,
is just raw material acquisition में कितना पैसा लगा ना? सोच तू लस्सी बनाएगा, दूध और शुगर का पैसा कितना था? That is it. Nothing else is in COGS. Which is
then gross profit should be revenue minus COGS minus the
नहीं
other expenses.
Gross profit is just वही तुम्हारा raw material minus करके कितना आता है. Gross profit के बाद तुम operating profit निकालते हो. There are levels of profit.
That is what I wanted to hear, but no one said about that. I was more interested in hearing that no, this formula is wrong. More interested.
So basically, so you are going for the net profit or something like that.
There are more profitability terms which comes down, but yeah, gross profit only takes in account the revenue minus whatever the cost was of the good itself for production. Okay, going ahead. Yeah. So I hope everyone has seen this term in Shark Tank, right? Once or twice. Annik, you will take over, right?
Yeah. So EBITDA means the total earning of the company means before interest, tax, depreciation, amortization. Amortization and depreciation. The meaning of amortization and depreciation is the decreasing value of assets as the time means as the time passes, and EBIT means earning before interest and tax. EBIT, and the net income is EBT minus tax. That's all from my side. Thank you.
Okay, so moving ahead with cash flow statement. So that is again like we studied the income statement, that mostly focuses on profit and losses, right? But what cash flow statement focuses on is cash inflow and cash outflow, and how the cash is cycling in the total the operation purposes. Okay, that can be like here as it is written in operating, it is like in day-to-day business, but there can be like cash flow statement can also depict the investing purposes, that is non-current assets that support the business, or current assets for instance. And then there is financing, that is shares and debts stuff, right? I think Tofik will take over the cash flow statement part.
Okay, so what
Yeah.
there we have covered that the cash flow statement is mainly three parts. Okay, operating activity, investing activity, and financing activity. Operating activity means if you are running a business, there have to be a expense that you have to put in, and operations in the daily operations of the business. Investing activity, like if you have to compete with the other companies in the markets, you have to compete with them with the new machinery, with the new technologies, new servers and the techs that have to be bought. Okay, and financing activity is the payment of debt and issuance and so. So in this thing, the cash flow statements of two types can be calculated, like the direct method and the indirect method. So direct method is the totally simple. Okay, so the cash collected from the customer, cash paid to the suppliers, and cash to the employees. So here are considering the three things: customer, suppliers, and employees. They're the main. If you are considering the three parts, you will be covered with the total operating activities. But in the indirect method, there is something different, like the net income. First, you are considering the net income and backtracking that. Okay, adding back the depreciation and amortization. Okay, that he have covered in the back slide. Like D and A, you have to add back, and then adjust the working capital balance. Just consider the previous balance sheet part that we have mentioned, the accounts receivable, inventory, and accounts payable. That will be covered here, the adjusting the working capital balance. And then the investing activity and financing activity, like the same. Okay, so next slide. So here are the four things. Okay, the most important: net cash provided by the operating activities. The operating activity, you have to run a business, like you are selling that the you have said, the lassi thing. Okay, so it is the lifeblood. If you have to want to run the business, this is the main thing you have to look after. Okay, so if you don't have the money to operate the main things, like the main core things of the business, you will not be able to sustain. It's like then the changes in the working capital. So if you have to understand the business is doing well or not, if it is in the financial stress or not, that you have to see that changes in the working capital, that is a positive or negative. You have to take debt in the long term or short term, or you are making money. That is the main thing. Then the PP&E, all I have covered that, the property, plant, and equipment. You have to invest time to time after 1 year, 2 year, or 3 years. That is the thing. And financing equipment and surplus, whether that is the revenue that you are generating is a positive thing, like more than your expense or thing, or covering your investments or fixed that's the main. Okay, so it is the it's 4 is important. Okay, so next slide. So that's all from my side.
Yes. So mostly in this slide, what we have covered is what financial statement analysis can actually benefit us. So it can actually help in evaluating financial health. Financial health of what? Financial health of specific companies, and also ours at the same time, that we will move ahead and discuss. Strategic planning, a company can decide if they have to go into some taking some credits, or go into liquidating their assets or stuffs like that. Investment decisions. Investment decisions is what I meant when I said that evaluating financial health of ours. Like, should we invest in a company, or should a company invest in some specific companies? All of it can actually be depicted from financial statements analysis itself. Performance benchmarking is something we will come to in some later sessions. Regulatory compliances, that I already said, that a company has to maintain their financial statements so that they can justify their expenses and profits when some regulatory body comes to them and asks that, from where you got this 100 crore rupees, right? and valuation analysis. We will not go into it right now specifically, but yeah, valuation analysis is a part of it, deciding what is the valuation of a company. Like I think Alankrita actually said when she was covering goodwill that I think a company has a specific valuation and like okay, but moving ahead, first I would like to ask you all what Alankrita actually covered while saying goodwill, like while mentioning goodwill. That would actually show how much attention you all have been like paying. And Shubham, Om, and Aditya, no need to like go ahead. I want to ask maybe Shubhro. Shubhro, you there? Right. No, Arijit, you also took part in the discussion, right? Shubhro, you there? Think not. Yes, Raj.
Yes, Priya.
Yeah, I was asking what is goodwill of a company? Think a company has its valuation. We can say assets and liabilities, but I would say go ahead and mix it together and say like think a company has 100 crore valuation and it is bought by a company at 20 crores premium. So what can we assume is the goodwill of the company? Any idea? Yes.
Will it be around 80 crores or something? The difference between the amount through which it was मतलब जितना का खरीदा गया और
Go ahead. You are going in the right direction, but I just used a clever wordplay. So you are assuming 20 crores is its intrinsic value. Yeah, 20 crores, not 20 crores, because I said it is bought at 20 crores premium, right? So the goodwill is 20 crores. Understood?
yes.
Yeah. So we'll move ahead with a real world scenario. How many of you know or have invested in Tata Power?
I guess I have, but not exactly directly into Tata
No
Power,
Tata Power, but have not
Yeah,
invested in
so-
Tata Power.
but through ETFs.
Through ETFs. Great. So why invest in Tata Power? Let's see. But definitely, as it is not an investment advice, so to make it more specific, I have only taken data till 2023. So let's go ahead. Balance sheet. What does the balance sheet actually depict? It is visible to everyone, right?
Almost, yeah, visible.
Yeah, it's pretty good.
So what does the balance sheet depict? You all say you all paid attention, right? So what does it depict?
Show your current assets, liabilities, and
Yeah. That is all theoretical stuffs, right? Now let's come to a practical stuff. You were invested in 2022. Now you are thinking of whether to invest in 2023 or not. So let's go ahead and see.
Okay, fine.
Balance sheet
Anyway,
shows that the
wait
current
a second.
asset.
Wait a second. Before anyone moves forward, any of you in this meet has any problem with any of these terms? Any financial year, I hope no one will have problem. But current asset, non-current asset, liabilities, total equities, total liabilities, and shareholders' equity, or total common shared outstanding. Any of these? Anyone has any problems? By the way, these all are in crores.
Yeah, what is this total common shares outstanding?
Yeah, so total common share outstanding means how much share is outstanding in the market, like how much share is actually floating in the market for buyers to buy and sellers to sell for. Okay, there are some common shares, and then there are shares which like institutions have, and then there are ESOPs, RSUs. Those can be also like sold in the secondary market, but common shares are mostly shares which can actually be traded in the secondary market as like just I can trade right now, right? When a company liquidate their what to say think there are two founders and they have 50-50 shareholding, but they liquidate 20% of their company to market itself. So 20% of the like company's outstanding share is what will be depicted here. Like the company's complete share, uska 20%. That is what the outstanding common share is. Okay. So yeah, now I think can go ahead.
Yeah, what I see in the financial year statements balance sheet is that in the last 4 years, last 4 financial years, the current assets, non-current assets, or the assets have monotonically increased. The current liabilities, though, have increased, but the gradient of increasing of liabilities and total is way lesser than that of assets. And the total equity has increased, and the common share outstanding that has to remain same, means almost has remained same. So as per that, the ratio of the total asset and total liability is somewhere total assets to total liability has increased. So I think investing in Tata Power is a good option.
Okay.
And in this,
okay, that covers 80% of it. That covers 80% of it. Anyone else wants to add anything? But no, wait a second. I would like to ask someone else. Anyone who wants to volunteer besides Shubham, Om, Aditya? Apurva? Apurva, you're there in the meeting. Shubh Agarwal?
Hello.
Yeah, like you were in the meet all the while, right?
Yeah.
So as said, that total assets to total current liabilities would be total liabilities would be like, yeah, Arijit, I'll come to you. Total assets to total liabilities is actually increasing, which actually infers we can infer that from 2022 to 2023 the ratio increases. That means the assets increase more than the liabilities, right? So is that all, or we can actually go ahead and see something else as well? So yeah, or like you want to add something to it, or you are like just happy with whatever he said?
Yeah, right now, like honestly speaking, I'm just come here to like gain the basic knowledge. After a while, like whatever, there were many few, like you were just now asking that what were the certain terms if you are not familiar with. I was like continuously going through the internet and searching for this stuff. So like this topic is like totally new for me, but I'm finding it interesting.
Yeah, that's fine, but then the only way to understand this topic well is to actually see it practically, right? We can understand the meaning of everything. Like you can Google each of it and you will understand the meaning. That is not the main purpose of the session. The main purpose of the session is so that you can implement it in your real life. That is what we want out of this session. So today you can go ahead and take a like decision on investing if you want to, through your own analysis, of course.
Excuse me, Bhaiya. Rather than comparing that total abilities and total liabilities, don't we think we should compare that current liabilities and current assets?
Why?
Because as we have just said, that current asset, that non-current assets are that long-term assets which are not accounting in that particular financial year. So while investing, we should think about that current assets. No?
Yes, you are right, but not in the case of Tata Power. Why? Because Tata Power is a company that has been there for a long time. Okay. And even if you invest in Tata Power right now, I said investing. I didn't say swing trade on Tata Power. I didn't say like any specific term. I said investing. And Tata Power is a company. Like if anyone has watched Scam 1992, I remember the statement Pratik Gandhi made, right? Tata का कोई भी शेयर उठा लो. lamba bhagega. So that is what Tata is meant for. Okay, so when we are analyzing Tata or any big company, big conglomerate or big industrial companies for that instance, we always see total asset. But when we are going ahead and seeing companies which are small cap, okay, for small cap companies or maybe even in mid cap range, when we see companies with lesser market capital, we go ahead and see the current assets and current liabilities itself, not the total one. You can see the total one if you feel that yeah, the company can run for a long time. For that you have to couple a lot of things. For that, then you have to come to the income statement and cash flow statement and see how they are doing there. Then you can actually take a decision that if the company can go ahead for a long run. Understood?
Yes, yes.
Yes. So as Om said, total assets and total liabilities was the parameter, definitely the ratio. And one more thing which you can see is I specifically said 22, 23, but then you can also take 21 into account. Total common share outstanding is the same. So the value created by Tata Power is actually remaining same in this domain. Like the company is not issuing more bonus shares or something like that. So the total outstanding shares remains same. So in that case, you can assume that the value of per share will keep on increasing as their total asset to total liability part is increasing. Understood? Like that is a way of thinking. It's not like that increase karega hi. Okay. Like whenever we take a decision, it is just a way of thinking, not that it will increase 100%. But yeah, that is a way of seeing it. Also, you can see total liabilities and shareholders equity is also increasing. That is again a small red flag, not a big one, because other all the parameters are saying that yeah, you should buy that. Okay, moving ahead to the income statement. A lot of things are there in the income statement. Who would like to come forward and just volunteer? Yeah, Shubham, come forward.
Income statement shows that the total revenue and the total earnings per share is increasing at a good rate. Like from 2022 to 2023, it almost increased by 2x. So the company is performing exceptionally well in terms of profit growth.
Yes. And
like the revenue is increasing, so the company is generating more sales, and the expenses of the company are not increasing as fast as the revenue. So has been a net growth of profits over the years.
okay, so you covered total revenue, you covered net income, you covered earning per share, right? Okay. What about dividend per share? DPS means dividend per share. If anyone is confused, dividend per share is
The
also
amount
increasing.
of money, like the amount percentage of the price paid, like in dividends per share, percentage of the share price.
Wait a second. Sorry. Yeah. Yes, go ahead.
Percentage of the share price paid as dividend per share. That's the DPS, dividend per share.
Yeah, that is DPS. But then dividend per share is also increasing. You are getting earning out of your share. You are also getting some dividends out of it. Right?
Yeah.
Net income is also increasing. What is
PBT does not have the expenses.
Yeah, it does not have that, but I am like asking that the income is increasing, right? So the company actually gets some money out of their operations. What is PBT and what is PBIT? Anyone?
PBT, profit before tax, PBIT, profit before interest and tax.
Yeah, both of it is increasing. So it's like a complete green flag on the income statement, right? Like anyone like agreed or disagreed?
Agreed.
Yeah, but what is payout ratio?
Like what you pay out in dividend by per unit
Per unit what?
share.
Okay. Yeah. Actually, what payout is dividend per share by earning per share, right? So that is the payout ratio, like how much you are paying out per like earning. Because you can go ahead and then say dividend by earning, right? Because per share gets cancelled. So yeah, from that perspective, the earning rate is growing more than the dividend rate. That
So
is what we
payout
can say.
ratio should decrease, right?
Hmm?
In the long term, payout ratio should be decreasing.
Yes, that is what the trend we can see, right? Now
Yeah, so
payout
it's a good
ratio,
sign, right?
yeah, payout ratio decreasing is not a bad sign. That's a good sign. But that again depends on the company. Like I said, you were seeing Tata Power. Now, if you go ahead and see some public sector union company, so that should have a better dividend payout, right?
Yeah.
Yeah. So that is how we look at it. Cash flow statement. Now, this is the fun part. The positive and negative comes in. So what can we infer from this cash flow statement? First of all, let's go ahead and see the free cash flow part. Everything was green signal until right now. And then we see that free cash flow is decreasing at a like very high rate. It increased a bit from FY22 to FY23, but it's still decreasing. And capital expenditure we see is increasing. What do you all think?
I think this is not intrinsically a bad sign. It is
Okay.
free cash flow is like operating cash flow minus the capex, capital
Yes.
expenditure. So company is investing a lot in its capital expenditures. That means it intends to grow.
Yes.
So this might not be a bad sign.
Okay. Now, what about the other things? Net change in cash, change in working capital.
Like cash from operating activities is positive and increasing, which is like increasing till 2021, but decreases from 2021. Moderately good. Investing activities, it is investing, so it must be negative. Cash flow must be negative. So it is good as the company is investing the cash it has earned. And financing activities, cash flow is also negative for the most part. Like financing activities require you to spend cash, except when
That
you
means
can receive
they
and
are
they get cash.
expanding, right? That means they are expanding.
Expanding, yeah.
Yeah.
So it is
So
Tata
that
Power, na? So they are focusing on green energy and new type of thing. They are considering new domains, so they have to invest. So that's why they are investing lots of money, and the cash flow part is there. Okay.
yeah, and that is the reason it is negative. Like you can see that in investing activities, you can see there is cash outflow a lot more than cash inflow.
Yes.
But yeah, from here, one thing which you can see, even if you see Tata Power's like stock market price during 21, 22, you would see that when in 21, when the things were better than in 22, the price was actually a lot higher. You can't pinpoint a specific time frame, but it was a lot higher. In 22, it got a bit lower. It was trading, I think, below 250 for a long time, 22 to 23. It was trading below 250. And then after then 22's, I think November, I don't remember exactly, it broke out. 22, I'm saying 23's, I guess, a certain point of March, it broke out. So that is what we can again see, that people are more interested in the cash flows, because or else it was a green signal throughout. People, more specifically the foreign investors, are a bit interested in cash flows, right? Anyone would like to add anything, Taufik?
So, so just consider one thing. Okay, so there are three statements, financial statements. So don't see that if it is negative, it is bad. If it is positive, it is bad. So that depends on many things: the current market situation, the trendy things and happening, like the green energy and everything that we all know, and the company is performing in which sector they are growing, which sector they are investing. So don't consider it only in the black and white. Okay. So if you have to consider a total holistic approach, you have to consider the gray part also. So why they are investing? Why they are expanding so much in that part? Because they have the future potential. They are investing in that part. So don't consider it as negative. If you consider the, like, if you see in the search, the Google search, what it is negative. So if you are googling like cash flow is negative of a company, it is good or not. They will say either good or not. But if you are considering, if you are a smart investor, so you have to see the all the other categories. Okay, so then you will be able to see that the company is growing or grow in the future, like after 2 years, 3 years, 4 years. So that's the main thing. Don't consider it as a black and white. There is a gray part, and that's the most part.
Thank you, everyone, finally, for bearing us for so long. Okay. And one task I wanted to give you all is 2024's financials. Analyze and tell us in the group itself what you all feel. Should we invest in Tata Power? I have taken out my money, but should I reinvest? That is what I would like to hear from all of you. Whatever you all studied, anything else you all wanted a bit more dive into, you all can definitely write in the group if you all have any.
I
Yeah.
feel that without even studying much of the cash flow statements, if we check out the relative company performances and grade them accordingly, so Tata Power comes at top. So basically, you can invest.
Yeah, means you want to like relatively, as in you
A
want to
relative,
study
a relative
sector
grading.
performance, right?
Yeah.
Sector
Competitors,
performance.
other competitors.
Yes, definitely, definitely. All companies are investing into the green technology. So yeah.
Environment is also very important. So after election result, there are many one they just change their decision. Okay, so there is a thing you have to consider it. You are in real world, not like a statistical, mathematical, calculative. Okay.
Yeah, so there is the feedback form. I would urge you all to actually fill in the feedback form. Whatever you felt good, whatever you all felt bad, go ahead and write it down. And also next session, okay, who all wants to volunteer for the next session? I would like to ask here itself.
Okay, so one thing, we have covered most of the things, and I think many of you will research on the different terms and everything. So if you want to ask, so feel free to ask in the group. We will like to answer that.
Yes, but one thing I would like to urge you all, okay, besides OM, I would like to urge everyone, because I am not asking OM because I think we already have these all in the syllabus. If anyone else also have this stuff in the syllabus, feel free to skip it as of now, because whatever we told you, these things are mostly enough for like valuing a company, not in absolute terms but relative terms, as OM said already. uh, you all can actually go ahead and see journaling procedures, ledgering procedures, trial balance, how to create trial balances, and how to go ahead and create trading account. Right? Because before creating income statements, I knew we should have covered it, but then the session, like already the session is 1 hour long, so we can't pull it so much. But yeah, before trading, like before profit and loss statement, there are trading accounts and everything. So you all should study it, I would say. Then, like some of the basic questions which you all had, that why this, like when we asked, we also saw why machinery is considered as liability, or why machinery is considered as asset. These all things would actually be clear from that perspective, that how the accounting procedures are actually done: bookkeeping, ledger, journal, trial balance. These all stuffs you should actually go ahead and do. NPV, net present value, how to actually value a company. NPV is a very good approach, I would say, for understanding if you want to invest in a company as a company. Also from a shareholder's perspective also that can be done, but mostly companies do it. NPV, XIRR, we can do all of it. Okay, so yeah, that's all for the session. Any doubt, anything, any like stuff you want to ask for regarding this session, well, can go ahead and ask in the group itself. And I think I already have the attendance. And Arijit Paul and Shubham Sarkar. Yeah, pardon?
I also got the attendance.
Oh, okay. Yeah. So also, I think Piyush, you there in the meet?
Yes.
Piyush? I think, yeah, I think stop the like session, YouTube live session. Yeah, stop it. And after stopping, just tell me once.